Okay, let's see. I think I have a little delay. Let's see here. Katie, are you able to see me or am I a delay?
I see you.
Okay, all right. So I think my mouth, can you see that my mouth is matching up to my words?
Yes.
Okay, all right. So on my end, there's just a little bit of a delay. So hopefully you can see it and it's okay. All right, everybody out there watching, welcome, 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 and thank you for joining in today. We are joined today with Katie Swanson. Katie, thank you so much for coming on today.
Thank you for having me, Dory. It's great to be here.
Yeah, so many of you might be like, all right, who's Katie Swanson? Katie Swanson is the owner of a CPA firm called Change Collaborative, and the Fitness Business Podcast has invited her to come on today to talk about PPP and Employee Retention Credit, also known as ERC. So, Katie, thanks for coming on and being our industry expert today.
Yeah, this is such great information that a lot of people maybe haven't been exposed to. So I'm happy to expose them to the information and maybe provide some strategies.
All right, outstanding. That's why you're here today. You are going to talk about a topic that you are the expert in, certainly not myself. So let's get started with our first question. This is such a great topic for all of the owners and operators out there dealing with all of the COVID and post-COVID stuff that they have had to learn and had to quickly become experts on. So our first question is, what is ERC for those listening and that are not familiar with it?
Yeah, so it's something that you might not be familiar with. Everyone's pretty much heard of PPP and hopefully got those funds, but then employee retention credit is out there and not as many are as familiar with it. So the employee retention credit is a refundable payroll tax credit equal to 50% of a maximum of $10,000 of wages per employee for 2020 and equal to 70% of a maximum of $10,000 of wages per employee per quarter for 2021. It's available for wages paid after March 12th, 2020 through June 30th, 2021. If you experienced a full or partial suspension in operations due to government orders, or if you meet the 50% or more decline in gross receipts for 2020 and 20% or more decline in gross receipts for 2021. The credit is extended through December 31, 2021. If you are a severely financially distressed employer, which means you had a decline in receipts of more than 90%, or if you are a recovery startup business. A recovery startup business is a business that began after February 15, 2020 and has annual gross receipts less than $1 million. Up until now, PPP and ERC were only available to businesses that existed as of February 15, 2020. So for quarters 3 and 4 of 2021, with this recovery startup business, it gets some recovery funds in the hands of those businesses that started after February 15, 2020. There is the infrastructure bill that's in the Senate, or that was recently passed by the Senate, and if it's passed by the House, then it would end ERC for wages paid after September 30th, 2021, except for the eligible recovery startup businesses. To get the refundable credit, you report the qualified wages on your quarterly employment tax return, which is Form 941 probably for most of the businesses that are listening. You can go back and amend prior quarter payroll tax returns if you didn't report those qualifying wages on the original filed form. And you can go back all the way to second quarter of 2020, which would be the first quarter that you would be able to report wages. And you'll want to work with an accountant, a payroll processor, or a CPA to get these payroll tax returns amended for you. They do have to be manually filed, so a lot of your online payroll processors like ADP and Gusto aren't assisting with the amended payroll tax returns. Any credit received does reduce your expenses allowed for that period on your income tax return. So if you've already filed your 2020 income tax return, you may need to amend that for 2020 for the employee retention credit that you do receive. So you'll want to coordinate with your income tax preparer. And with that, make sure that your credit you're going to receive is more than what it's going to cost or the burden that it's going to be for you to amend your 2020 income tax return. That's a lot, but that's pretty much a rundown of what the employee retention credit is and how you can get it.
Yeah, that is a lot of information, but that's exactly why you're here. We want you to deliver all of that information just to help kind of clear up, any questions that business owners or operators might have out there. And before we get into our next question, I am inviting everybody out there viewing, please feel free, put your questions in, and we will certainly answer them at the end. I know Katie's hoping and dying and that you're going to ask her some questions. So, all right, Katie, let's move on to our next question. And that is, what is the latest development with PPP and ERC that the audience needs to know about?
Yeah, so I have kind of three recent developments that we should talk about. The first one is that the SBA now has a website that is live for you to register and apply for PPP loan forgiveness. And I have several links that I'm going to mention throughout this that I can post to the Facebook Live event, post-event, that will help point you in the right direction for some of these things. So they did this, so they're offering this website for loans of less than $150,000 for you to go to their website and apply for forgiveness. And they've done this to reduce the burden on the lending institutions. And lenders have to opt in order to participate. So there is a list of PPP lenders that are participating, and I include that link in the Facebook Live event when we're done here. There's over 1,000 lenders that are participating. So you can browse that list once I post the link and see if your lending institution is on there. If your loan is less than $150,000, then you can use the SBA website to apply for forgiveness. There's a user guide also for the portal, which I'll post in the event after this. So that your lender, your original lender, still reviews and approves the forgiveness application. The portal just assists in facilitating the forgiveness process, again, to reduce the burden on the lending institutions. The second thing that I would say you need to know about that just came out is that the employee retention guidance for related individual wages. So this has been a big lingering question since ERC came out in spring of 2020. Is that of whether related individuals are qualifying wages for the payroll tax credit. So the question is, are wages paid to a majority, which is greater than 50% shareholder, are those qualified wages for ERC? So the quick answer is if the majority owner has living ancestors, so that could be kids, parents, siblings, spouse, in-laws, then their wages do not qualify for ERC. If the majority owner does not have any living ancestors, then the wages do qualify. And there are a couple of really good resources for this. If you want more explanation, if you want to read or hear examples and discussion from tax experts, there's a 20-minute video that I can post a link to, and then there's a 15-minute podcast that I can post a link to whichever one you prefer. It's great information. Again, the quick answer is if you have living ancestors, those wages don't qualify. If you don't have living ancestors, then the wages do qualify. The third thing I would mention that's come up recently in the last week or two is that there is a new safe harbor for ERC gross receipts calculation, which addresses the question, does ERC gross receipts test include PPP funds? So back when I was introducing what employee retention credit is, in order to qualify, you have to have a partial or suspension of operations, or you have to go through the gross receipts test, which is for 2020, a 50% decline in gross receipts, or for 2021, it's the 20% decline. So when you're doing that evaluation of a decline in gross receipts, do your gross receipts include like PPP funds and shuttered venue operations, some other things that maybe fitness businesses don't relate to? So the IRS has given a safe harbor that says, so it kind of depends on whether you include those gross receipts. It's kind of up to you, as long as you're consistent in how you're using the methodology and you apply it across all your related organizations. So if you don't want to include the PPP gross receipt or the PPP funds in your gross receipts test, which it would be mostly like, I don't know when it wouldn't be advantageous to include those. But yeah, if you don't want to include those, then you don't include them as long as you're consistent in that methodology. And there's a revenue procedure that I can post a link to that explains all of that. So those are the three kind of most recent developments related to PPP and ERC.
Excellent. Thank you so much. So I have personally a quick question just from listening to you is, where do you personally find all of these updates at? So you gave us 3 updates. Where do you find them at?
So since I am a member of the AICPA, and they host frequent, it's about every 2 weeks, town halls that I listen into, and they post a lot of great information out there. If you search AICPA TV, those are out there for anyone to watch and listen to and hear a lot of the same updates that I'm hearing. There's publications that go out that are specific to accountants. The Journal of Accountancy is a really good place to read articles on this information. And then just SBA related, like the SBA website has a bunch of information there as well.
Okay. Perfect. Perfect. And I know you mentioned here throughout the start of our interview that you would post some links to some of these places for our listeners and our viewers as well. They can follow along. So we thank you for that very much. All right, let's move on to our third question today. And that is, why is it important to talk about ERC and PPP together?
Yeah, so you're now able to take the employee retention credit if you received a PPP loan. Originally, that wasn't the case. When they passed legislation in December, it allowed you to take employee retention credit if you had received a PPP loan. But with that, you cannot use the same wages for both your PPP loan forgiveness and your employee retention credit. So that's why it's important to complete your PPP loan forgiveness application in conjunction with the related quarters amended payroll tax returns listing the ERC qualifying wages. And there are strategies to make sure that you maximize the benefit of both your PPP forgiveness and ERC based on the wages that you're listing for both.
Okay, good answer. I'm sorry, I have just like a slight little delay on my end, so I apologize for that brief pause. Perfect. All right, so let's move on. Question number 4. We have about 5 questions here. We're trying to get through on our lunch break chat here with Katie Swanson. Again, she is the owner of CPA firm Change Collaborative. So if you're just jumping on, please continue to watch as we ask our next question. And that is, Katie, what are your top tips for maximizing benefit of PPP and ERC?
Yeah, so I have a few here. The first one I'm going to talk about relates to the employee retention credit and an election that came out that what they're calling the alternative quarter. So for 2021, when you're looking at your gross receipts test for 2021, which is if you had a decline in gross receipts of 20% or more, whether you would qualify to be able to take the employee retention credit or not, you can now use this alternative quarter, which would look at the previous quarter to see if you qualify. And I actually had this, I took advantage of this for a client. So for example, in 2021, in the first quarter, your gross receipts decline was 18%. So it doesn't meet the required 20% decline in gross receipts. But with the alternative quarter, you can look at quarter 4 of 2020 and see what was the decline in gross receipts there, and in looking in compared to the same quarter in 2019, what was the reduction in gross receipts, and then do you meet the required deduction in gross receipts, and then you would qualify. So I took advantage of that. They didn't qualify when I looked at quarter 1 of 2021 compared to quarter 1 of 2019, but I looked the alternative quarter, I looked at quarter 4 2020 compared to quarter 4 2019, and they did qualify then. So take advantage of that alternative quarter election that you have there. So the next strategy that I would talk about is kind of ERC and PPP in conjunction with one another. So if you have enough qualifying expenses to equal your total PPP loan amount. So qualifying expenses are made up of 60% payroll, ideally, and 40% of non-payroll qualifying expenses. And so we're in this strategy, we're assuming you've spent 100% of your PPP loan funds in a way to result in 100% forgiveness, with 60% being payroll and 40% being other non-qualifying expenses. So if you've done that, then you really need to look at your wages on an employee by employee basis, because you have opportunity then to maximize the wages between PPP and ERC. So what you don't want to do is just plop on, I'll go back a strategy, don't just plop on 100% of your PPP loan as payroll, really evaluate, do you have other non-qualifying expenses to make up the 40%? So if you've got the 60-40 split, 100% loan forgiveness, what other strategies can you use? So it's really looking at an employee by employee basis. So for me, something that did come up, so one strategy, if you have an employee that's earning more than $10,000 per quarter in 2021, so when you have this choice, put the full $10,000 to ERC and the remaining to PPP, because you're going to maximize your ERC credit and you're still going to be at your required payroll percentage for your 100% loan forgiveness. So when you have that choice, make sure you're maximizing your ERC. And then what that's going to do is it's going to free up other wages for other employees. So you're getting the maximum benefit that way. So you're going to have to look at it on individual employee by employee basis and maximize the ERC, because there's no reason to say, all right, so say you have more payroll paid and you have an employee that made $13,000 in a quarter and you're not picking up any of their wages in your PPP payroll because you can only take 10,000 in your ERC. So then where's that 3,000 going if they're not listed as your PPP payroll, right? So it's when you've paid more payroll than you need for PPP loan forgiveness, you really need to look at an employee by employee basis and make sure that you're picking up the payroll for PPP and ERC in order to get a maximum benefit from both. And the other thing is for S Corp owners. So when I was talking about one of the recent developments with the guidance that came out for related individual wages. So S Corp owners, majority owners, wages are not qualified wages. So they're not going to be able to be listed for ERC. So you're going to want to maximize their wages for PPP. But then you also have to remember and be careful that PPP limits you to the equivalent of $100,000 of wages. So that's again why it's important to do ERC and PPP together. So don't assume that you're going to have more wages for PPP for S Corp owners than what it's actually going to allow you, because then you're going to have to pull wages from other employees for PPP in order to reach your 60% limits. So it's not easy. It's not as easy as just slapping a payroll figure on your PPP loan forgiveness application, because you have to know what wages you're kind of earmarking for PPP and what wages you're earmarking for ERC. And you'll want to do them in conjunction with one another to make sure that you really are maximizing the benefit employee by employee. So those are, I guess the couple strategies that I would say. Use the ERC alternative quarter when maybe you're not qualifying, but that would put you into qualification for ERC. Don't just slap your payroll figure on your PPP loan forgiveness application. Don't just list 100% of your funds used for payroll if you have other non-qualifying expenses, and really look at your wages employee by employee and make sure you're getting the maximum benefit for ERC and PPP.
All right, Katie, why do you make it sound like it's just so easy?
Well, I'm glad it sounds like it's easy, but it's not.
It's not, I know, yes. Well, listen, we have a question. Before we get on to our last question between you and I, we have one of our viewers has a question, and you know what? I think I'm just going to ask it now since we're on topic. And it's from Eugene Downing. And Eugene wants to know, does a split between casual, part-time, or full-time employee positions determine the outcome of the claims?
Does the split between those types of employees? So not to my knowledge. I mean, if you want to have so I would invite you, if you want to have more of a deeper conversation and go into more details about kind of what you're looking at in that specific situation. I don't mind jumping on a 15-minute call to go through that with you, which you can access on my website. Just book a 15-minute call and maybe we can go into that in depth. I don't think what you're asking, whether the employee is full-time or part-time, it's qualifying wages, no matter what. But if you want to talk about that further, I'm happy to jump on a call.
Yeah, I think I feel like that's what Eugene is asking as well. Just it does depend on the status of the employee. But yeah, absolutely. And yeah, we greatly appreciate, at the end here, we'll make sure we have your contact information so that if anybody wants to reach out and you have a minute or two to maybe to answer a question or two after our live session, that would be awesome.
Yep, sure thing.
Great. Katie, let's get to our final question. And that is, are there other funding sources available to businesses?
Yeah, so I want to make sure that we don't forget about the EIDL, which requires that you apply by December 31st, 2021, if you're needing additional working capital. So the EIDL is a 30-year loan at 3.75% interest up to a loan amount of $500,000. And so the question is, how do you know if you're going to need extra capital? I would recommend that you put together a financial forecast for maybe the next 36 months, which is about 3 years, based on what your business has experienced through the pandemic and what you expect to happen kind of coming out over the next couple years. And you'll want to create different scenarios within that. So a scenario is kind of like, what if? So what if your membership level doesn't grow back to pre-pandemic levels? What if your membership maybe actually decreases based on city ordinances that we're seeing, like in New York City, where you have to be fully vaccinated to go into a fitness center? Those types of things, like what if, and what does that look like then for your business? And can it survive? So, look at your cash, once you forecast it out, what your business looks like over the next 36 months for different scenarios, different what if situations, what's your cash flow, and do you need additional working capital? So the EIDL has to be used for operating the business, for really like needing working capital. It can't be used for purchasing equipment, refinancing debt, relocating, that kind of thing. It really is to fund your daily operations. And so, just based on how you've been impacted by the pandemic and how you expect your business to come out of that and what that recovery period looks like, do you need additional funding? Create a forecast for that and monitor your cash balances and really look at what your worst case scenario might be.
Yeah, I'm glad you brought up about the EIDL, because I have heard a lot about that as well. And I'm glad that you brought that up for us today. And it's also important that I like that you stress that it's operating capital and you can't purchase, new equipment or, new programs, things like that. All right, Katie. So before we wrap everything up here today, is there any other tips, ideas, information that you would like to share with our audience that maybe we didn't go over here the last 20 minutes?
I think probably the biggest thing to reiterate is that, it's pretty complex when you get into PPP and ERC and how they interrelate to one another. And especially with amending the payroll tax returns, you're probably going to need to work with somebody, an accountant, a CPA, someone that's very experienced in and an expert in those areas in order to make sure that you're getting the maximum benefit of those programs.
Yeah, I think every club owner and operator out there needs a Katie Swanson. Katie, thank you so much for sharing your knowledge with all of our viewers, all of our listeners. We do want to let everybody know that, yes, while this is live, it will be saved, so that if you didn't get a chance or the opportunity to watch everything today, you can come back to it. Or we ask that you please share it with other industry professionals that in the business, because this is good stuff. It's important stuff. As we all see, COVID is not going away without a fight. So who knows what the future brings. So Katie, we really appreciate your time today.
Yeah, it's been great to be here.
Yeah, and just give one little shout out. Tell us just a little bit, just I'm going to take maybe like 20 seconds just to tell us a little bit more about Change Collaborative.
So Change Collaborative is a modern CPA firm focusing on virtual CFO services. So really understanding your business operations and being a partner with you in that to really strengthen your financial core to make your business successful.
And Katie, did you always focus on the fitness industry, or is this something that you just kind of started deviating towards?
So I really just decided a few months ago to niche down to the fitness industry. My business I started about a year ago after being in public accounting for a few years and being in corporate finance and accounting. And it really just came out of my love for fitness and who can I really serve in my business to make the world a more healthy world. I love fitness, and if I'm going to be doing something that I love, it's going to be learning about what's happening in the industry and being up to date. I love reading. I just love reading about fitness and knowing what's going on, and so it just kind of kind of meshes my personal and business interests to make it a lot more fun.
All right. Well, thank you so much. We're so glad that your little niche has landed us in our industry. We're eternally grateful. And where is Change Collaborative located at?
We're in Missouri.
Oh, Midwest. Okay,
Yes, but we work
fantastic.
remote, so we can work with anyone in the United States.
All right. And why don't you just give us a link, maybe a plug, maybe a web address here that everybody out there listening and watching can get in touch with you. Where can they find you, Katie?
Yeah, so you can find us at changecollaborative.co, and there's a link there if you want to schedule 15 minutes to chat about maybe specific situation that you're looking at, and see if we can help you real quick. And on social, we're Change Collaborative or changecollaborative.co.
All right. And we'll make sure that also gets put in all of the comments down below so that people can get in touch with you. Katie, thank you so much for coming on today. We appreciate your time. And I know that you coming on today at least has helped one person out there, which, you know what, if we can help one person, that's a win for today.
Yeah, I hope so. There's lots of funding available here, so take advantage of it and maximize it.
All right. Katie, thank you so much. And have a great rest of your week.
All right.
Take care. All right. Katie, thank you so much. And have a great rest of your week.
All right. Okay, can I just post links in that Facebook event?
Oh, absolutely. You sure can.
Okay.
All right. Let me just get us off here. Thank you so much. Give me 1 second here.